Right now, euro to US dollar is correcting again. After touching a 4-day high of 1.1711, the pair has slipped to around 1.1655 in European trading on Tuesday, August 25th. The US dollar index is up 0.1% near 99.07. That may not sound dramatic, but euro bulls failed to hold above 1.1695. In technical terms, that is a clear rejection at resistance, opening the door to a deeper pullback. The trigger? Traders are squaring ahead of two major events, the US PCE inflation report for July and the Jackson Hole Symposium. So this is not a new trend yet, but a nervous pause with a bearish tilt. The last 7 days have flipped the narrative. Initially, the dollar was on the back foot because the US Treasury said it would double planned buybacks of long-term bonds, at least $4 billion per operation from 10-year to 30-year debt. That revived the dollar debasement story. Then strong US services data changed things. The August services PMI jumped to 56.8, the fastest since December 2024, reminding investors the US economy is not rolling over. Meanwhile, eurozone inflation printed at 2.9% in July, and Nomura still expects the European Central Bank to raise rates in September. So two central banks look potentially hawkish, but immediate data momentum has shifted back to the dollar. For anyone trading or sending money abroad, the current level matters. Euro to US dollar is up 2.76% over the past 30 days and 1.15% in August, but still about 0.5% lower than where it started 2026 near 1.1733. That tells you the big picture is range-bound, not a clean breakout. The pair has been trapped roughly between 1.1359 and 1.1740 for 3 months. Scotiabank strategists warn the risk calendar this week is significant, and that could create moderate dollar gains in the short run. They also note the technical trend remains bearish for the dollar, but no reversal is evident yet. In plain English, the dollar is bouncing within a longer downtrend, meaning choppy conditions for euro buyers and sellers. Near term, the direction hinges on two catalysts. First, the US PCE price index. If it comes in hot, the 38.9% market probability of a Fed rate hike in September could rise, giving the dollar more fuel and pushing euro to US dollar toward the lower end of its range. Second, Jackson Hole speeches could reset expectations for both the Fed and the ECB. UBS has already raised its long-term euro to US dollar target from 1.17 to 1.20, betting the ECB stays hawkish for longer while the Fed eventually eases. That is a longer-term view though. For now, the risk is the euro fails to hold above 1.17 and slips back toward 1.15 before any fresh breakout. If the pair pushes below 1.1600, the double top pattern becomes much harder to ignore. So what should you remember? Today's move is small, but not trivial. The euro's failure above 1.1695 while the dollar index firms near 99 suggests the correction can continue in the very short term. But the wider story is still conflicting forces, a debasement narrative from Treasury buybacks versus surprisingly strong US data and a hawkish ECB. That is why euro to US dollar remains in a range, and why chasing either direction without a clear break of 1.1711 or 1.1600 is dangerous. The next 48 hours, with PCE and Jackson Hole, will decide whether this correction turns into something larger.